Welcome to TheoTrade. This is Don Kaufman. August 19th, 2022. There's about 11 minutes left inside of the trading week. Spoos off some 57 handles here on this Friday afternoon. Did sell-side activity just reignite some of those market fears? We're going to talk about that and much more here on this weekend's update. Listen, there's some areas that are pretty straightforward. Obviously, we've seen a reversal inside of the broader marketplace. Correlation is also, it's not quite there. It's kicking in pretty good, but let's go beyond the obvious in this weekend's update. When I say the obvious, hey, look, there's some sell-side activity. Like everybody is going to look at this and start to rationalize like, we might not necessarily be out of the woods yet, but before you go there, there's some negative aspects of this marketplace. And quite frankly, in today's sell-side activity, there's actually some positive ones. Let's actually get started here on this weekend's update with, if anything, one of the positive aspects, and that's this. Back to 42.11. We didn't hit it. And it's an absolutely unequivocal critical level for the S&Ps, and we did not hit it. And I got to tell you, with 10 minutes left, we're more than just a hop, skip, and a jump. You'd have to see some wild sell-side activity. But the fact that we got down to 42.20 and did not get sucked into what we term our gravity point is a bit of a tell for the marketplace. There are some positive signs. So I know everybody assumes, I'm just going to come in here, guns a-blazing, spoos are down, get ready. That's actually not what I see. In fact, I was talking about that a little bit earlier in the week on Tuesday afternoon's video that, there was a reversal in the market, but there was no intensity behind some of that sell side. Today we saw degrees of intensity, but as we're going to learn is, volatility isn't exactly doing what we expected it to do. Like if this thing is going to get downright ugly, I sure as heck don't feel it. Just not yet anyway. So let's actually discuss a little bit more about some like 50,000 foot view of some levels in the marketplace. For that, I'm going to go to the 30-day 1 hour. Okay, what we really did, is the rally. People are constantly, talking about the lows and lows in the marketplace. In fact, I'll tell you what I'm going to do. I'm even going to go a little bit further out in time in this particular kind of distinction over here. We're going to do the 180-day 4 hour, because what I want to reference is here's actually our lows all the way back to 36.39. Okay, all we basically rallied up to what is a gravity point, which is 39.31. We backed off, we pinged around. Okay, in my opinion, strictly my opinion, the rally did not grip hold until we actually ripped off of the 39.31 gravity point. And that unto itself is actually, again, kind of a critical point because, you ask me, I don't think we actually really started gripping hold in that rally until ultimately late July. You go, whoa, come on, Don, you were 39.31. We're already off that 36.39. Yeah, this back here, and I say back here, let me be very, very specific. In fact, I'm even going to box it out. All right, back here, it's degree of a volatility box. The volatility box, ascended to the upside, which actually took us specifically to another gravity point. There's no question it was a rip and rally though from 39.31 all the way up to the 42.11. We got slightly above it. We've actually fallen back, right? And again, we're more than a hop, skip, and a jump off that 42.11, but it looks like we're probably going to pull back there. Nevertheless, one of the reasons I wanted to mention this is if we start getting back under the 42.11, we're going to be just another wild volatility box. And when I reference like volatility box, and people are not necessarily familiar with that terminology, that is literally just us pinging back and forth. And again, those are some tumultuous trading environments. But if you sell premium, you do in-out spreads, you got to love it. because right now, I mean, what we've seen, and again, I'm going to go back now to the 30-day 1 hour, this has been a lot of one-sided trade. If anything, if there's a positive point to be taken from today's marketplace, it's that you want two-sided trade. Because even those of you that are bullish, you're like, if you miss the bullish move at all, there's no real entry point. This is where this is like amateur hour in here. What are you going to do? You're like, I'm going to buy here. You're going to buy here. Really? You're going to buy here after we went from 39.31, okay, all the way to 4,100. And now you're going to step in and buy? Again, it doesn't leave you much opportunity for entry when you have a one-sided marketplace, okay? We want this two-sided trade. We want chop. We want volatility. Bring the pain, okay? And that pain that's grinding people up produces just phenomenal trade opportunities. Again, you could be in in-out spreads, which I executed into several different in-out spreads today. You can sell premium. It's a party, people. And again, I'm not all about like just the bearish moves. There's no question. Like, look, I got a bunch of bearish positions on. I got negative delta through and through. I'm having a decent day. Yeah, newsflash, okay? When you're bearish and you have a down day, it's decent. But that's what I'm just not about that right now. I'm just about the two-sided trade. So the first and critical point to be made on this weekend's update, 42.11, we didn't hit it, okay? We come down to it. That makes it just, I mean, trade is just going to be, again, very binary early next week. And by that, okay, I don't mean to intimidate anybody, but when I say binary, once you hit one of these gravity points, a 50-50 shot. Either are going to explode higher or are going to come off hard and fast, okay? And there's no decisive factor, okay, presently in the tape, but I am going to show you a few areas I think of critical concern moving forward, because there's some real fears starting to resurface. As I said, sellers are kind of reigniting some of the market fears, but some of the fears that are resurfacing, okay, it's not exactly what you might think. So let's actually get into that. So inflation fears resurface. By the way, if you're kind of curious, what kind of caused the sell side activity? What caused some of the sell side activity in large part was a PPI number out of Germany. What I found interesting is the German markets, okay, the gap's a little lower. They sold off, but they only finished down about 1%. I mean, quite frankly, I think they took it in stride, but their PPI number was ridiculous. I mean, PPI and like CPI, all right? So one's a leading edge, one's maybe the lagging edge. Yeah, neither here nor there. The PPI numbers were just through the roof. We had double-digit inflation numbers from UK, Germany showing insane PPI, yada, 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 okay? Inflation fears are resurfacing. If inflation fears resurface, obviously interest rate fears are going to resurface. So now let's cruise over to the bonds, because we could just talk about this marketplace till we're blue in the face, but I'm going to be very frank in saying you do realize that nothing happened this entire week until today. Nothing happened. In fact, let me explain nothing. You want to see nothing? This is nothing. This is the SPX Expected Move. Okay, on Monday, there was nothing, followed by more nothing. We had a doji of nothing, followed by nothing. And today we saw some sell-side activity bringing us close, but no cigar, into the lower edge of the expected move. Yeah, so if you missed every trading day this week, other than today, you missed a whole lot of nothing. Again, the whole entire week boiled down to today's trading session. But as I said, there's some really pressing areas that you got to understand, critical things that have occurred in today's marketplace. Number one, so the bonds saw some pretty stiff sell side activity. Frankly, we've seen this movie before. The bonds sell off. When the bonds are selling off, let's actually bring up the TNX, which is the 10-year, okay? Rates jumped today. So rates jumped a little higher, and as rates start to jump a little higher, one of the things I've talked about incessantly is rates higher, especially like the 10-year, okay, kills growth stocks, which actually explains, all right, if you will, look at the monsters of tech, everything from Meta, the artist formerly known as Facebook, from Meta to Apple to Microsoft to Google to Amazon, they're all taking a pretty considerable hit. I mean, again, frankly, I think they're kind of taking it in stride. It's only 2.3%. And with the move in the TNX, okay, make no two ways about this. This is a violent move, okay? TNX has been kind of trending a little lower and maybe listlessly higher, but this is a huge spike to the upside inside of interest rates. So if we are to see interest rate fears spike again, without unequivocation, markets are going to come off. I mean, that's one of the first real fears that you have in this marketplace. Bonds sell, rates rip. Rates rip, they're going to come for tech stocks. Why? Again, the best way to, in my mind, to kind of piecemeal that together would be just simply to say that tech are degenerate borrowers. Is that fair? You're like, that's not very nice, but they are. I mean, there's Elon Musk out there. So anyway, tech is just, degenerate borrowers, but it actually kills growth. I mean, they're growth stocks. Growth is not a great story in the midst of a rising interest rate environment. Lo and behold, we're going to have rising rates. The other thing we're going to have is obviously Jackson Hole is coming up, and that's gonna surface some fears right there. I mean, the entire Jackson Hole Symposium. That's where taxpayers pay a whole lot of money for a couple of Fed people to get together in Jackson Hole. Sounds like a good party. There's the closing bell. Sounds like a good party. But none of us were invited. Nevertheless, in Jackson Hole, the entire symposium is going to be about inflation and really the path of rates moving forward. And there's going to be a lot of news out about that, but it's late next week, and that this is going to kick off. And again, it's just going to be a constant concern. So inflation fears are going to be just completely reignited. The sellers are going to obviously hit the growth stocks in case of that. But here's something that is unusual, and this is disconcerting to me. Financials got hit hard today in the face of rising rate environment. So this is a little bit of a catch-22, and that's why I wanted to bring up. If I actually bring it up in terms of auto expected moves, what I wanted you to see, and I've talked about this incessantly, is that, financials, I mean, they're your move. They are really the pivotal sector in the S&P 500, okay, that has driven a lot of this move, right? Pivotal portion, okay? Still filling some trades here, but they're a pivotal portion of the S&P 500 lifting from its lows. Like, look at the percentage move in here. In fact, I'm going to put it percentages. The financials were down about 23%. They rallied, were only down about 9%, okay? This is a hideous move. And the reason I say that is all of a sudden you're in a rising rate environment, which, a lot of people, again, surmise that's supposed to be good for financials. They came off. And in fact, the financials actually closed in the lower edge of the expected move after having, umpteen, different moves, parabolic moves, if you will, to the upside. It's a significant move back inside of the financials. That one is definitely worrisome because, you try to come up with reasoning for the marketplace. There's no reasoning. Financials got hit hard simply because the market started to correlate more. And correlation is simply like, look, if we're going to sell something, we're going to sell everything. We're going to sell everything. There's no place to run to, no place to hide. We didn't exactly have that feel today, but maybe starting to come out. The other aspect, and I don't have a great reason for this one either, crypto has really gotten brutalized. Okay, this could have a lot to do though with maybe the meme stocks. And again, I'm just going off the beaten path a little bit, but this is one where again, in a rising rate environment, the crypto fears have come back, but a significant move. It's 9%. Again, a 9% move down, specifically inside of crypto markets today. It's disconcerting because even the Bitcoin futures did pretty phenomenal volume. Now, does this necessarily spill over to the S&Ps? Not so. That's actually not why I'm bringing it up. Okay. I guess my, interpretation of crypto selling, and the whole reason that I am bringing it up is because throughout the course, of this recent rally in the S&Ps, all right, and this is, again, it's the critical reason why I'm bringing it up. Throughout the course of the recent rally in the S&Ps, especially in the last 2 weeks, we've heard a tremendous amount about meme stocks again. All right. So obviously everybody's familiar with, and I don't need to rehash it. Okay. That happened. All right. It happened. So Bed Bath & Beyond fell by 40% today. Multiple trading halts throughout the way on the downside. After trading 30, it's now trading basically at $11 stock. Okay. Mem got hot. Mem got killed. Mem got killed, crypto got killed. All of a sudden, those retail traders decimated inside of a 2-week period. And I think that that does resonate back to the S&Ps. That all of a sudden, okay, that sell side activity really did get reignited, and people are like, nothing has changed in this marketplace. This is the beast. It is as vicious as it has ever been. Okay, but as I keep saying, volatility to the upside is still volatility. So crypto gets crushed. And again, I think it's a tell about retail. Retail, oh, they're nervous now. Because, if you held your positions pretty much throughout the course of this year, let's actually cruise up to a year-to-date percentage, still down 11%. But people, okay, they were down towards the depths of this over 20%. It's a bear market. All of a sudden, it could be a bull market. But I'm going to tell you right now, okay, a slight move lower from here, okay, fears are not just going to resurface. Okay, they're not just going to reignite. People are going to bail. All right, this is some people hung on by a thread, and we rallied back up, and they're like, my prayers are answered. Yeah, that's going to turn around real quick, and that's one of the reasons I was watching this 42.11, such a critical level that we missed it. And the reason I'm watching it, it's a perfect exit place for a tremendous number of clientele that are just looking to claw back some of the losses from early in the year. So crypto got crushed. The next thing, and this is actually a bit of a positive light, volatility, it's just not making the move I would have expected. So I can look at VIX till I'm blue in the face, barely moved. So I look at the volatility futures. Now, volatility futures, if you look at this, you're like, look at the gap. That's not a gap. That's actually a contract roll. Okay. The point being is we didn't gap. All right. These are the previous 2 days. Volatility definitely came up a little bit, but I look down to the bottom of the screen because I'm a volatility kind of geek. VVIX moved, but this isn't indicative of duck and cover. Short-term volatility barely budged. In fact, if you look at the 9-day VIX, it faded into the end of the day. All right. It is one of the strangest things I've seen in quite some time. You've been up for umpteen days in a row in the S&Ps. Volatility, okay, gets pretty much annihilated. You see the marketplace sell off by 1.3%, and no one is going out there and going like, I need puts. I mean, because that's what drives volatility, okay? I don't like it. I don't like it because there's no confirmation of the sell side in the broader marketplace. Okay, we'll get a better feel also about this, about skew, because skew started to elevate, came all the way back up almost to 130. It dropped back to 124. I'm inclined to believe, and again, skew is a calculation done after the market closed. I'm inclined to believe that skew is probably going to jump a little bit, but that remains to be seen. It's calculated again about an hour after the close. Nevertheless, okay, there's some disconcerting areas. Disconcerting to the bear side of it is that volatility, okay, didn't make the move we expect. But listen, that can happen later, meaning that you come back down to the 42.11, the market's comfortable there. It's why we call it a gravity point. And volatility may not, okay, rip until we break significantly under the 42.11. And that has actually obviously crossed my mind. Okay, here is though a more bearish scenario. So again, I'm kind of showing you both sides of the marketplace, but you want something bearish? The last 3 days, I mean, really the last 2 weeks, let's just put it what it is. The last 2 weeks inside of the dollar, this is an absolute wild move. This is defensive. There's no if, and, or but about it. But a rising dollar exports inflation. The dollar rallying unto itself, okay? In my opinion, that dollar rallying is unequivocally bearish for the marketplace. Why? We export inflation. We export inflation, okay? Fed's not going to like that. They're not going to like it at this point. And they're still going to be, foot to the floor in terms of rising, rates. They're going to have to raise rates because a strong dollar, again, is not, that's not something to be taken lightly. Okay, that is a formidable position. People are actually ducking and covering and moving into the dollar. Now, last thing I want to cover here, then we'll get to the SPX expected move. critical equity moves. One of the things in equities and index, I've already brought to your attention the financials. They are a critical sector. You know, everybody, again, is in tech land. You don't have to be so much in tech land. I want to show you something. When you look at stocks like Facebook, they're already beaten down and bludgeoned. They really didn't pay very much attention to this latest rally. Take a look at Google. Google, did it involve in the latest rally? Not really. One of the interesting things about Google is Google has had this crazy range from basically 105, we'll call it, to 120. They broke back inside of that range. Any follow through and sell side inside of Google is pretty dire for the marketplace. But again, what would the selling be based on if it comes raging back? Obviously, Microsoft has played a role in the rally, but only pretty much since its earnings. It rolled over, though, pretty good today. It's all about Apple. Okay, when you talk about a critical equity product, it's all about Apple. Okay, if you want to look at single-handedly what has brought us to where we presently are in the S&Ps, Apple is heavily involved. The financials are heavily involved. Clearly, Tesla has played some degree of a role in the in portions of the rally, but it's not nearly as critical, of course, would be Apple, okay, and financials as a whole. And again, it is financials as a whole, but Apple, obviously, the king of all market capitalization, kind of taking the cake over there. You're just going to have to watch those coming into this next week. Again, obviously, you've got the 4211 to hang on to. You've got Apple. You've got the XLF. I can't put enough weight into the financials. When I say I can't put enough weight into how important this sector is, because, again, the financials are single-handedly responsible, okay, for a large majority of the rally that you've seen inside of the S&Ps. And today's move, oh, that doesn't look good. It doesn't look good. It was done on some good size. Okay, we hit the lower edge of the expected move. All right, and we did this move to the downside on a rising rate environment. Last but definitely not least, the SPX, the mother of all products. So the SPX expected move, okay? This last week, we had a $75 expected move. Did we hit it? We did not, okay? Ooh, we came close. We missed. Okay, we did not hit the edge of the expected move. And again, it was a $75 move, either higher or lower. So what can we anticipate for the next week? Like, this is a way to kind of handicap, like, what does this next week bring? Okay, $82 expected move. Now, that's not exactly set in stone. You have 4 more minutes where the SPX is technically open. So this could fall back down to like 81 and change. Okay, but it is notable. And what's notable? What's notable is that the marketplace didn't do very much. We had a little 1 day of volatility, and all of a sudden, we actually did see slightly more vol come into the marketplace. We're going to have an $82 expected move. But, you know, one thing I think that really resonates with me, okay, you just saw, you know, over a 60-point range inside of the S&Ps today, and yet the entire next week is like plus or minus 82. I got a question, okay? You think that's worth selling? Because I sure don't. Okay, I'm not selling at $82 when I see a $60 move in 1 day. So lo and behold, expected move looks a little light. Volatility looks light versus some of the price action we see on the screen. Listen, this next week, these inflation fears, okay, they're going to resurface. There's enough data points coming out, right? Durable goods, nobody's going to like that, right? There's enough data points coming out, PMI, okay? ECB minutes, all right? These are all data points. You're going to talk about like GDP, all right? There's enough, again, coming out that you're going to have that cause for concern. And obviously, we're going to be wrapping up late into next week with none other than the king himself, Jerome Powell, to speak at the Jackson Hole Symposium. And you better believe Fed rhetoric is going to be thick this next week. So if you're looking for volatility early on in the week, you're going to think to yourself, nah, they're going to wait for the numbers. I don't think so. I think we're actually going to start the week with a little bit of bang in terms of volatility. So, you know, strap in. Pretty good chance we're going to come back down to that 42.11, and we're going to have to pretty much investigate and kind of, you know, make some decisions when we do hit that gravity point. That's it for, of course, this weekend's updates. A lot to think about because, again, sell side activity. All we've had as of late is buyers, more buyers and more buyers. We attempted a few sell-offs, but this is the first day that we've had some real sell side. It was done on decent volume. And, Well, now you've got cause for concern because I think everybody realizes, everybody rationalizes when the party is over, things could get ugly again and ugly in a hurry. Thanks everybody for joining us here at TheoTrade. Have a wonderful weekend. Bye bye.